I'm just opening my.
Can you share the screen if at all you're making any calculations?
Will you share it or I'll share it?
No, you can
Whatever.
share it.
I can share?
Yeah.
You can just share if you want. Okay. I'm sharing it. Okay. I'm just opening a spreadsheet. This one. Can you see the spreadsheet?
It's coming up. Yep.
Untitled spreadsheet, you can see that. Let me increase it. So now, so you have the rate. The rate you want to find out, NPR is 30 years, right?
30 years, yeah.
30 years. 30 years. And then PMT is your monthly 9,000.
9,000. That's, I think that is yearly, not monthly.
Yeah, yearly. Yeah, we have got yearly. EV is 0. Future value is how much? 5,50,000, right?
5,50,000, yes.
50. Okay. So NPR. You did some silly mistake somewhere. But that's okay. 4% is 4.5%. That's what happens normally. 4, 5, 6% also sometimes it goes. So this is the calculation.
Okay. So is the formula I mentioned in the query section is right?
Formula is right. Why don't you try it right now?
Okay.
Because the same formula I have given, right? B3 periods 30, then minus 9,000, then 0, then 5,50,000. The only thing is that you gave 55,000. I think I know that's why. I think you gave 55,000. Yeah.
Okay. Yes, my bad.
Okay. Got it?
Yeah.
It's a typing mistake, typo.
Yeah, I'll check it out again. Sir.
Yeah.
Thank you.
Yeah. So you, if possible, get rid of it.
Sure.
Simple. Okay, if possible, get rid of it. So it's not worth it. You have got term insurance?
Yes.
Okay, so you have got term insurance. Okay, this is a worthless thing. Okay, so get rid of it. Simply get rid of it, if possible.
Okay.
Yeah. And you can do this calculation. Like, how many years you have been doing this?
Nope, I didn't do any calculations before.
Okay. No, how many years you have been doing this endowment?
I started just 3 years ago.
Okay, started 3 years ago. Suppose if you surrender, try to find out how do you do that calculation. Let me tell you. First, you try to find out how much money you'll be getting. Okay. So now you have a separate this thing. I'll show you how to take the decision whether you should get rid of it or not. Okay. So now suppose
no, it's not an endowment plan actually. It's a term plan.
It's a term plan. 5,50,000 you are getting that this thing insurance or something.
No, that is 2 crores.
2 crores.
Yeah.
Plus 5,50,000.
No. This calculations I have made it as part of the practice that has been listed in the practice session.
Oh my God. Okay. So I thought you bought it, right?
No, okay. That's not the case.
Okay. Okay, now it's okay, right?
Yeah.
Now it's clear, right?
Yeah,
okay.
Yeah.
Anything else?
Nope, sir. Thank you so much.
Okay, welcome. Okay, then after that, Satyasi, I'll come to you. But first, let me finish. There are 2 questions only, 2 more questions. Prince has got 2 questions. Prince, are you there? Prince, are you there? Okay. PJ call. Yes, sir. just a moment. Let me take you in. And, can you unmute yourself, sir?
Yeah.
Okay. Okay, sir. So how is the course going?
The course is going very, very great.
Okay. That's great.
Yeah.
That's great. Thank you so much.
Yeah.
Priyanka posted a financial freedom framework with the SIP calculator stops at second year. From third year onwards, have we to fill in the formula for every year to find the yearly SIP? It's not like that. So step up, when you do that step up, so first year itself, you get the calculation. So you don't have to do every time. Of course, you'll have to review it.
But when I tried it, when I filled some other figure, it stops at second line only.
Okay. Okay, because it will be too long. That's why I get just like 2 lines, such that you can make out, okay, this is how it will go. Okay, so you can do one thing. Yeah, you can do one thing. You can just drag it. You can just copy this last row and then copy and paste it. Okay, I'll show you. So just a moment. Okay, I'll show you. Of course, now mine is in this thing. It will take some time. Because what happens, normally what happens, a lot of people have, suppose monthly for how many years and so, right? So it will be too long a list. So I have just given 2 or 3. 2 lines I have given, right? So 2 lines I have just given.
Get it beyond 2.
Yeah, so it's not for 2 years, it's
Yeah, that's what.
What is that? Just a moment. I'm trying to find out the FP calculations. I think this one. Just I'm opening the sheet. It's taking some time. Okay, this is okay. These are the nifty returns. So I don't know. I do a lot of research here. So I think I shared it in the master class, I believe. Anyway, later, when we'll talk about this. So okay, here I guess second and third year, right? So first year, second and third year, you do one thing, sir. So this is, of course, this is some, when I keep on doing research, that's why it is that. You just do one thing, you just copy this, like an entire row, click that entire row, copy this, and then paste this.
Okay.
So you'll get it, not third year, you'll get it. Okay, this is annual growth.
There is something I found I was getting mistakes.
Tell me. So this is like this, yeah. Can you share it? Suppose you can give me your data. Just a moment. I think I have already given the data.
No, I will just see. I will just if you can show me how to do it. Why it is repeating third year again? It should go fourth year. That is what I'm saying.
No. This is what happened. This is not there. You'll have to do it. Okay, just a moment. I'll show you. So your shows like this. Okay.
It shows up like to this only. It doesn't show the years.
Yeah. So now this.
Show me the basic calculator.
This is the basic calculator.
Yeah.
Okay.
Yeah.
This is the basic calculator. From here only I gave you a copy. Okay. So now I have just given you up to here just to give an idea that this is how it will go on.
Yeah.
Okay. So now if it is there, suppose a number of years, suppose there is a let me do a 10 years plan.
Yeah.
Okay. Annual growth of SIP is 6%. Expected annual return is say 8%. Okay. So now this is the plan. Second year this much, third year this much. Okay. For fourth year, what you'll have to do, you don't have to actually calculate it. So you know, like, it will be increasing by 6%. Let us do at 10%. Okay, let us do at 10%.
Yeah.
So it will be increasing at 10%. Can you see that? Every time. Now, even then, like, this is third. You just copy this and just paste this. Calculations will be done automatically. This you'll have to write yourself. Fourth year.
Yeah. Okay.
Okay, it's like.
So I have to do for every year myself.
Huh.
You
don't have to do that because you know, like, 10%. Suppose next time, without doing the calculations, I know next time it will be how much? 2442 into 10%, 1.1. It will be
No, my point was that is there no method that once I fill in the first 4 rows, it automatically shows the 10 rows for all the 10 years. That should be the lot. Then it is a calculator. Otherwise, if every year we have to do, then I would not call it a great calculator.
In fact, you don't have to do that. You just need to understand how much was the last time. Because what happens, sometimes you'll see, this is 10 years, right? So people here doing 20. So 20 into 12. So 240 rows. We can do that. Okay. 240 rows will come in below. Okay. So we just need to take decision today. Are you getting it? So that's why it is not necessary. Anyway, we'll have to, once you do the workshop, you'll understand. Anyway, we'll have to, every year, we'll have to review it. Okay. Suppose it is 386. We know, like, next year it will be 425. We'll have to do it ourselves. We don't have to do that calculation every time. Getting it? It's not necessary. This we need just for planning purposes, only for once. That's
also, another question was, this 386 was every month for the first year. I have to pay 386, isn't it?
Yes,
and
exactly.
This was yearly, and here was okay.
Yeah, 386 per month. If you do annual planning, 481. Okay, so whatever you do next year, even if there is nothing, so next year you'll have to increase it by, suppose there is nothing. Okay, say there is nothing. Okay. So in that case also, I know, okay, we'll have to start with 386. Next time it will be 386 into 1.1, 10%. Next year it will be 425. I know it because we have already said annual growth is 10%. If I do annual plan, then we'll have to increase it by 10%. This 4.48 into 1.1, 1.1, so 10% increase. It will be 4926. So we don't have to do that calculations every time. It's not necessary. Only first time when we are planning, then only we need to do that. After that, okay, we know it. 1 year gone, we'll have to increase it by 10%. Another 1 year gone, we'll have to increase it by 10%. Sometimes, like, okay, fine. Okay, now the situation has changed, everything has changed. Let us do the calculation afresh. That needs to be done. We'll have to review it. We'll have to keep on reviewing. Understood, sir?
Okay.
Okay, so this is how it is. You don't have to keep on doing these calculations all the time. Only once you know this is the plan, 10% it will increase.
It solves my purpose, but I was thinking that maybe I am missing something.
No.
That it is not showing the entire thing.
No, it's not like that. It has been like this only. Okay, because we need to do it just once. That's it. Clear, sir?
Okay.
Okay, so you have got one more question.
Yeah, I have one more question on
this. You can ask this question directly here also.
Yeah,
but here you are writing
that you see, here we are taking a rate of, say, for example, annual growth of 10%.
Yes.
Now, actual situation is maybe for 4 years we have 10%. 5th to 6%, it could be 7%. 7th to 9th, we would go for 3%. How to take care of those variations?
This is, you see, when you do the planning, you'll have to do the planning assuming something. When you change, suppose today we are deciding, okay, for 10 years we are going to do this list. Okay, 10 years, 10%. Okay, but if you have to change it, every time you change, you'll have to do the recalculation. Okay. So that recalculation you have to do anywhere. Whenever there is a change in rate, when we'll be going through, when we'll be discussing debt fund also, there also you'll see, or any point of time. In fact, in equity also, we'll have to keep on. That's why, it is necessary, continuous being in touch with the market and knowledge is necessary. That's the reason. Okay, that's why I said like it's not that one time you do and then okay, you are done. Okay, I have just planned. I will be putting this much of money every month in Nifty. I'll be achieving my goal. It doesn't happen. This is the reason. Now you know. This is the reason.
Okay, thank you.
Okay, now I'm going through your next question. Okay, so can you give us some examples of current great mid cap or large cap or index funds where we can invest now with reasoning that will give us good hands on this game? Okay, so now you see, to understand this, how to choose. First thing is that you need to understand equity valuation. You have gone through, sir, PE ratio, etc.
Yeah, only after that I asked this question. If we see PE also, then which are the good funds in the market, for example, how to find them?
Okay, got it.
If that is a practical thing. That was sort of I understood.
Yeah. So that is how to do that. That is covered in the mutual fund section. You have gone through the mutual fund section?
Mutual funds section. Yeah,
it's later. You are yet to go through, I think, right?
Okay. I went through equity section.
Equity section you have gone through, right? So equity section, you have got the knowledge of equity valuation. You have got the knowledge. Okay, you know, like at this valuation, how you should decide whether you should go with the mid cap or large cap or something. Okay. Exactly. When you will go through the mutual fund section, then you will see. So there is something called something called rating. Okay. So let me show you. Okay. So how you see rating. So there is, for rating purpose, we do follow value research online. Okay, valueresearchonline.com. So they give rating. But before coming here, you must have thorough knowledge on equity valuation or debt valuation. Okay, because ultimately we take decision based on the valuation, whether we should buy large cap, mid cap, or small cap. Okay. So once you have taken a decision, okay, for this purpose, again, we'll discuss all these things in very detail. What is this? Just a moment. Okay. So they keep on changing their interface actually. Okay, so when you do the workshop, in the workshop also we'll go into details, right? How to choose it. Then suppose today you have decided. So tell me, like, which fund you should invest today for, say, some purpose. Tell me. Say. Which kind of fund? Which kind of fund? First kind. Large cap. Yeah.
Keeping into view, I will see first of all what is the PE sort of environment. And right now it appears the PE is very high.
Okay.
So I think the safest should be index fund.
Okay, beautiful. Okay. So now you see, now when is the index fund? Now this is the funds. Now amongst index fund, we'll have to look for. This is the fund monitor. Only thing is that this guy, they keep on changing. Okay. So why value research? Because a lot of ET money, etc. they also uses value research rating. Valueresearchonline.com. So fund monitor, first funds, then fund monitor. Do not go with all these things. Like, there are so many wealth builder, steady income. So these are for those who do not have knowledge. Since we have knowledge, we will directly go to fund monitor. Okay, and you have chosen and taken a very good decision. Okay, so since the P is slightly towards the it's above average, if you want to play safe, then you see basically here when it is an index fund, you will not get the category because index fund is a passive fund. Passive fund means they will invest only in those 50 companies. Okay, so you can, virtually speaking, you can just buy any good companies index fund. So you will not see index fund here. Okay, or is it there? No. Sectoral funds, no. Index fund is not there, right? You will not get Nifty fund or you will not get Sensex fund. Okay. So now say we are deciding large cap. Now when it is a large cap, then there are, because index fund all are same. Okay. So now large cap. So now in this large cap, if we see large cap, now we are clicking in large cap. Okay, so we are going to large cap, and then here you will see they are giving ratings. In case of large cap, I think there are no 5-star fund. Okay, this is one 5-star fund. Can you see that? X is blue chip direct. Okay, this is 5-star fund. Baroda PNB, this is 5-star fund. Canara Robeco Blue Chip, this is 5-star fund. They're all you can see 4-star funds also. Some people are aggressive. Okay, I'll 4-star fund giving good return. I'll go with 4-star fund. Okay, that also you can do. That is not suggested. But somebody, once you have knowledge, you can play. Okay, main thing is that ICICI Blue Chip Direct, this is also a 5-star fund. Okay, so now we can see, now this is how, so first we will see all the 5-star fund one by one. Invesco Industry Large Cap. Can you see that? There are so many large Kotak Blue Chip Direct, there are so many 5-star funds. Okay, now let us go by one. So now I'll also give you a shortcut, and once you do the workshop, there also we will show these things only, but we'll go into details. Okay, so now once you know, so now we have come to where now they have changed the interface, right? They have changed the presentation. They have completely changed the presentation. Okay, so now they have given, here they have, okay, so this is they have given some comparisons. Okay, they have given some comparisons, and then after that what we'll have to see, where are the details? I think they have changed it.
One question ahead, when they are saying this 16.80 as the return, is it a return per year?
It is annualized, yes. Annualized. Always the returns are annualized, if not mentioned otherwise. Okay, let's remember this. Okay, so now I think I think they have recently changed this. Okay, I'll have to really look at it, because they are saying very high, okay, as per SEBI's riskometer. Okay. Okay, so now they are detailed comparisons. Okay. Now these are okay, they have changed it little, like recently they have changed, because for the first time I have seen, because almost every other day I see, once in a week I go through it. So now I'll show you what you need to see. You will see everything here. What is the net asset you will see here? Okay, of all this, Canada Robeco, this is 5-star. ICICI True, this is 5-star. Axis Blue Chip, this is 5-star. Now I am giving a shortcut. Shortcut is, what is the shortcut? You see, it do not go through riskometer. This riskometer is SEBI has given some guidelines. It has little to do with with people who have actual knowledge. Let me tell you. So those who have joined this course, they need not go through the riskometer. Okay, don't look at it. SEBI has given something, okay, such that they can warn people. Since it is equity, they are saying it's a very high. And what we need to see, you see expense ratio, etc. Once you go through the mutual fund part, or once you attend the these things, once you attend the workshop, you will understand this expense ratio they are irrelevant things. Okay, because the performance of the fund is calculated after the expense ratio. Okay, so you don't have to bother with the expense ratio. You need to see the performance. So now you see, like they are giving 3 years return, 5 years return, everything. Okay, so they are giving 3 years return, 5 years return. Can you see that? For Axis Blue Chip, ICICI, Canada Robeco, these 3 are the 5-star fund. So from here you can see 7 years return. How are they? Almost they are same. Okay, then after that, where they have given alpha, etc. They have risk allocation, sector. So they have given here. Okay. Now I am giving you a shortcut. Once you start going through all these metrics, risk ratio, then rolling returns, not important, trailing returns. Yeah, rolling returns also you can see, like let's say, okay, forget it. Now they are playing this. Okay, anyway, it's a good guy. Based on watch period, these are not risk ratios important. In the risk ratio, till you become an expert. And how you become an expert? Just by going through this, continuously go through this, you will become an expert. But I am giving a shortcut. The shortcut is choose the 5-star fund. Amongst 5-star fund, list out all the 5-star funds and their alphas. Whatever is the best alpha, choose that. Alpha is important. It's not that alpha is not important, alpha is important.
Where is alpha? Where is
this
alpha?
Is the alpha. This is the alpha. Can you see that?
Okay. Okay.
So here, Canada Robeco Blue Chip, this is highest alpha 3.51. So there are other 5-star funds also. You can look them also. Okay, there are so many 5-star funds. We have right now in front of us. They have randomly selected it: Axis, ICICI, and Canada Robeco. Okay, so we are looking at the alphas. So Canada Robeco, and let me tell you, I have bought it for my clients. Canada Robeco Blue Chip, for my clients, I have bought it. So this is one. And same way you can see there is again another fund I can remember in the large cap category. So that is called Quant something. Okay, just a moment. So I have changed the. Okay, you can this thing also you can choose. Okay, they have changed quite a lot. I think last 1 year, last 1 week. Completely changed the interface. Portfolio, you can see. Portfolio means where they are investing. They're also investing in debt. You see, like you see, they are also investing in asset allocation debt. They're also investing in debt. So don't go for it until and unless it serves the purpose. Okay, 12% is in debt. If you think it's not for me. So again, this also we'll see in the workshop. We'll also discuss about this one, how to look at this fund style. So this is important. We'll discuss about that, how to look at this. But mainly, I have already told you, don't look at the P ratio, etc., etc. P ratio you'll have to look at for Nifty only. Always remember this, nothing else. We will take decision looking at the Nifty P ratio only. Okay. After that, of course, we'll have to understand this, how it is. Because sometimes what happens, you see, we were thinking it's a pure equity fund, but it's not. Actually, it is a hybrid. You're getting it? Because they are also putting some money in debt. Okay. So this happens. That's why we need to go through what is happening in the background. That is the reason. Okay. So we are not interested in hybrid. So why should we? We will not look at this. So probably we'll look at something else. Now I have changed it. Okay, where to find it? I'm just going to beginning again. Okay. Okay, fun house, fun category. So now there are so many. Okay, so we are only taking 5-star fund. Huh? Waste iron. Okay. So you need to go through it because let me tell you, today also for the first time I have seen this interface. Earlier it was not there. Earlier it was much more easy. In fact, straightforward. Now they have made it slightly complicated. Okay, so now let us see Quant. You see, this is also very good. Huh? This is also very good. Only problem is it is very small. Okay, of course, now we invest a couple of lakhs, right? So for us it is fine, but otherwise, what happens when this you see 110 crores only. Net assets 110 crores. Canada Robeco 7,000 crores. ICICI Blue Chip 32,000 crores, right? So now this is also you need to look at, because if it is a small, sometimes what happens, they will wind it up. Okay, only 110 crores. Okay, wind it up. Okay, but this otherwise performance of this is also pretty good. Huh? So I'll just show you. I'll show you this again. All these things will go into details in a workshop. We'll go into very details. Okay, and very beginning, we'll start. But it's always good if you can finish that entire course before the workshop. Okay, so next week we have workshop, right? Okay, so here is riskometer. Always ignore riskometer. Okay, so there is no portfolio breakdown. Okay, so here are the performances. Quant. Okay, Other details. Detailed comparison. So here we'll see. So you can also select the funds. Okay. So now you see quant is having a what is the alpha? Risk ratios. Risk ratios, you will get the alpha. Okay. Alpha is 6.09. Can you see that? In fact, alpha is better than Canada Robeco. So that's why. So it's a good fund actually. Okay. If you invest in, you see, like a good fund means if the time is conducive for large cap, then only, always remember this. Okay. If the time is conducive for debt fund, whatever good this fund is, okay, it will go down the drain. Doesn't matter. Always remember that. So whatever the step I have said, you should follow that step. Okay. This is it a time good for this fund or this kind of fund or that kind of fund? After that, okay, you know, this is the time for this kind of fund, because any point of time, like even if like tomorrow market is going to go down, but still you will find the best fund. Okay. But it doesn't mean that it's the best fund, so we'll invest. Always remember that. Huh? This logic you must remember. Otherwise, otherwise money will go down the drain along with the market. Understood, sir? Got it? So you'll get the details again. Yeah.
6.09 is the maximum for the quant focused direct.
Yeah. 6.09 is the alpha.
Alpha for quant focused.
For quant focused then.
But here, this Canada Robeco is not here.
Canada Robeco is not here. I think you can take it because since they have, okay, just a moment.
Yeah, we can take
okay, just a moment. They changed it quite a lot. Okay, just a moment. Okay, let me see what is there. So Mire we do not need because Mire is 4-star.
Yeah.
So we can change Mire with Canada Robeco. Okay. Let's see if I can. You see, like, you know, so Canada Robeco, you see, so many are there. So that's why I say, like, there are thousands of funds. You must be very clear what you are doing. This was blue chip equity direct. This one.
Yeah.
Okay. So now you can see.
Thank you.
Okay, so now we have all the 5-star funds here. Now you can see the fund age. You can see all are 9 years. 9 years, 7 years. Portfolio turnover. Where has it gone? Risk ratios. Okay, risk ratios. What is that? 6.09. Canada Robeco is 3.51. Okay. In fact, you know, this. Let me tell you one thing. This I was ignoring this particular fund. Okay. In fact, you know, one student, he has discussed in one of the support sessions. So why don't you look at quant focus? And I was skeptical because, you know, quant is actually, it's a technical. Quant means, you know, something to do with, like, you know, statistics and all, where I don't have much trust so far investment in. Like, you know, it's because, you know, we do select funds based on fundamental thing. But quant, though they are saying quant, but actually they are actually doing fundamental research level. Okay. And really speaking, I couldn't find anything worse actually. Everything is so good. Okay, so this is why I have that day I have said, like, I tried to find out some flaws, but, you know, nowhere I could find out a flaw. So for this fund is concerned, because that is like, you know, I was not open-minded. I was judgmental. I was thinking, okay, one fund, small fund, probably, like, you know, they are doing some hanky-panky or something like that. Okay, but let me tell you, I couldn't find any flaw in this particular fund. Only thing is that they are small. Their name is quant. Okay, that's it. Got it, sir? Next week we have next week means this week itself, right?
Thank you very much. It was very nice.
Yeah. So in the please do not miss the workshop. I think, you know, you have taken you have taken the workshop, right? Because in earlier students, a lot of people they had option. They can go for the workshop. They cannot go for the workshop. But later we, like, you know, we found that those people who do not go through the workshop, actually they do not understand it properly. So then later we made workshop compulsory.
Are you keeping the workshop date the same, because there has been a lot of requests for this India-Pakistan match on that day?
No. We are like, you know, they are playing India-Pakistan. We are playing Nifty and Sensex.
Okay, all right. That's
So
that's fine. I saw on the WhatsApp group.
In fact, no, of course, no, okay, strangely, like, I cannot access my WhatsApp group. Okay, because, some technical problem is there. Okay. I don't know what happens. Only whatever is forwarded to me by Poonam, I can see that much only. And I always tell her, okay, until and unless something which you cannot resolve, you need my help, then only forward me. Otherwise, don't forward anything. So you have that authority, like, you solve it. No, we are going ahead with it because it's always book 27-28. So we are doing workshop. That's for sure. Okay. Because once we fix calendar, we cannot change it.
Right.
I have very small leeway actually. I follow a very tight schedule. Okay. Got it, sir?
Thank you.
Okay. Yeah. It's a very practical course. Remember it. Okay. I think one of the most practical course that and I'm trying to make it, every day I try to make it like, more and more practical. We keep on updating. Okay. Okay. You're welcome, sir. Okay. Now, after that, yeah, Mr. Saptarshi Sarkar, can you just unmute yourself?
Yes, sir. Good evening.
Yeah, good evening. Can you switch on your this thing? Video. Yes, sir. Just a moment. I am just taking you in. Yes, sir. Tell me.
Sir, first of all, thank you very much because we are becoming literate over financial issues. Otherwise, I didn't have any knowledge. I was in zero if I consider about the financial knowledge. And I have completed up to like 3.1 or something, 3.2. And as because I have started invested like 3 years ago by some well advisor. When I was actually visited a bank, SBI, there he suggested me to invest on some SBI Magnum Global Fund. And
SBI Magnum
Global Fund.
Okay.
SBI Magnum Global Fund Regular Growth. It's a mutual fund. I started investing like from December 2018, and every year I was putting 3,000. And now actually I have started watching and comparing the results. There it was on their website. They are claiming that the XIRR is 19.41%. That means I consider it's a good till now.
You see, my this thing is that, yeah, you may or may not find, you may find many funds might be 19%. Okay, you see, return is not the criteria actually. Return is one of the criteria to choose. Okay. So now why we go through, I have just shown you that you go through that the rating process and all. Okay. So they have done the research. There are so many alpha, beta, Sortino analysis, sharp analysis. This is so many data. Okay. The good thing is that nowadays, since the internet is there and these guys, the value research online guys, most of the time you'll see like ET Money, they always like rating when they say they within bracket they write VRO. VRO means value research online rating. Okay. Most of the in India they are pioneers. So we do follow their rating. Okay. And whatever they are saying about the company, that is unbiased. Okay. And everybody follow VRO mainly primarily. Okay. There are few guys who do their own research, but most of them they follow VRO only. VRO means value research online. We also follow value research online. Okay. So now you see when they do the rating and all this analysis and all they do, ultimate goal is one. Ultimate goal is return per unit of risk. That is the ultimate goal. Various way they calculate it. Sortino analysis, Sharpe ratio, and then there are 2-3 more like all these ratios, all these calculations are to find out how is the return and per unit of risk. Okay. So now what we look at only at return. Okay. So why I'm saying all these things? Because you will see sometimes you may get deceived. One company, one fund is giving for 3-4 years of beautiful return. Okay. but the risk may be so high, tomorrow everything can go down the drain. Okay, everything can be wiped out tomorrow. Okay?
Yes.
So now Value Research Online, they take care of that. So they do the research and they try to find out those funds where they give 5 stars based on this criteria only. How much return per unit of risk? Suppose return is huge, risk is also huge, that is not a good fund.
Okay.
Return is good, but risk is less, that is a good fund. Okay. So now my suggestion will be, finish that course. If you have taken a workshop, attend the workshop next this like
27, 28.
27, 28, right?
Yes.
So after that, you take decision. You yourself will be able to understand whether it's a good investment or not.
Okay.
Let me tell you, prima facie, if I can remember, once upon a time, SBI Magnum, we see SBI Magnum also used, like, one SBI Magnum, they start doing well, then, they start SBI Magnum this, SBI Magnum that, SBI Magnum that. Okay.
Okay.
Yes, we're getting it, because,
Okay.
one brand has done well, they try to. So now, once upon a time, SBI Magnum, it was, I believe, like, I'm not very sure, but I believe, like, one of their funds got 5-star rating or something. Okay, once upon a time.
Okay.
But right now, at least in large cap categories, why I'm saying large cap, because nowadays market is risk level is slightly high, so we are mainly focusing on index and large cap only. Okay. If you have gone through, like, as you have gone through the P ratio, you can understand that. Okay. So now I don't see SBI Magnum in the. I cannot remember seeing SBI Magnum in the 5-star category, at least in large cap section. Okay. So now, which section? Do you know which section actually it falls into?
Sir, SBI Magnum Global Fund regular growth. It's regular growth. It is
regular
mentioned
growth
there.
fund. Okay, so it's a growth oriented. So it might be a large cap or mid cap. I don't know. Like, we'll have to really see that. Okay. So now, let it be there, because next this after 3 days we have this session. Then you'll understand it. After that, you'll be able to find out yourself whether it's good or not. Okay. Doesn't look good, like, because I cannot remember seeing that fund, like, in any 5-star category. It may be good also, you never know. Okay. So that you can understand. Most probably you'll have to change it. Most probably. Okay. Even if it is giving good return. Okay. Most probably, I'm not very sure. It may be wrong. Okay. So only after going through your purpose, your criteria, you'll come to me. Understood? Okay. Anything else? Anything else?
No, sir. Thank you.
Okay.
Thank you.
Yeah. Tell me. You are supposed to tell me something.
No, sir. Actually, I was supposed to tell that I am looking forward to looking forward to attend the workshop session.
Please do that. Okay.
To enhance my knowledge.
Please do that. And because this time, for the first time, it is happening in Saturday and Sunday. Sunday, I remain very busy. For, like, I have sessions in the morning and some other responsibilities also. But despite that, I have taken a risk. Okay, so I'm just going to test it, whether I'll be able to sustain. Okay.
No, sir. Saturdays and Sundays would be good, because we don't have.
Normally we do on I know that, and that's why we have tried here. Normally we do it on Thursday and Friday. Normally, okay. So this is for the first time we are testing it. So if we find it, it's okay, then we'll go ahead. And if I find, like, no, I cannot. So it becomes too exhausted, right? I become too exhausted, then we'll have to go back to Thursday, Friday again. Okay. So do not miss it. Okay. So do not miss it. Okay. From next week, it may not happen, because we always say it is a Thursday and Friday session only. Okay.
Okay.
6 to 10. Okay. Yeah.
Thank you. Sir.
Okay. Welcome. Okay, after that, Sai Krishna. Yes, sir. I can see you. Yeah, can you unmute yourself?
Yeah, good evening, sir.
Yeah, good evening.
Audible?
Yeah, you can. I can hear you.
Yeah. So thank you very much. First of all, so we got a very wonderful, session. I just started editing 2 or 3 modules because of the work schedule. So hopefully, in the weekends, I'll be taking the 3 videos as well. So coming to my question, I will just share my screen. I have just prepared something.
Yeah, just a moment. Yeah.
Hope my screen is visible.
Yeah, I can see your screen.
Okay, so I just have a query on my home loan part, where currently my outstanding is around 24 lakhs, the total amount, 22,000.
Okay.
And my monthly EMI is 29,998, and 7.85% rate of interest. And this one I just took in terms of month. Otherwise, if I take in terms of year, it is 10 years.
Okay, got it.
So one is like I just want to know my future value, how much like total I will be paying that, because obviously I will know when the interest gets on, then obviously this amount may be up to 35 or 36 lakhs.
True.
So this two breakup, I just want to get it. And the second part is like with my portfolio, like I just want to understand, like if I withdraw my PF and PPF and I repay my home loan, will that be a good suggestion, or should I keep on continuing? Because I see like both the rate of interest, in PPF and PF compared to the home loan, it is almost same, somewhere around 7.5 or 7.1%.
In that case, like, get rid of the loans because it's an headache.
Okay, but only thing, like in that way, I'll be like the income tax part, I'll not be able to get benefit, the 2 lakhs that I'm getting.
So that calculation you have to do.
Okay.
You'll have to do that calculation because so how much is what is this thing, like,
So I just want to know like how this I think it is wrong figure, but I just want to know.
No, this is not calculated this way. I am just showing you. You just stop your sharing. That okay? I'll share, and automatically it will be stopped. Okay.
Yeah.
So, okay. So now I'll show you how this calculation is being done. Okay, so now you give your this thing. Your outstanding loan is how much?
24 lakhs 22,384.
24 lakhs 22,000.
384. 2422,384.
Okay. Your EMI is
2,998 monthly. 2,998.
in tenure is
Is this in terms of year or month?
anything month will do.
Approximately 118 months.
Now this is how it has been calculated. Okay, it's calculated in a very simple way. So now here we are giving the periods. Okay, periods here. So today we have 0 period. Today this is the loan amount. Okay.
Yeah.
This is the loan amount. Make it slightly bigger. And after that, so your loan amount is this much, and then after that your PMT means EMI. Okay, so EMI is, so now I'm doing it manually. Okay, so ultimately we'll have to, I'm breaking it down, then we'll see how it happens. Okay, so now EMI, okay, right from here onwards, just a moment. EMI is, this one is the EMI. Oh. This is the EMI. This is the EMI. And after that, the interest portion, interest payment, interest portion, okay, interest. What is the interest coming out? You did that calculation? Effective interest rate?
7.85.
7.85 per month.
No,
Sorry, per annum. Okay.
Per annum, yeah.
So 7.85% divided by 12. Okay.
Yeah.
Effectively 2.65%. Now interest and then principal. Repayment. Again, just simply repayment. Okay, repayment. And then balance. Balance. What is the interest here? 42234 into 0.65. So now this is the interest portion. This is the EMI. Okay.
Okay.
So that means your repayment is 29,900 minus this. So this is the repayment first month.
Okay.
Okay. So balance is your this minus repayment.
Okay.
Okay, got it? So this is how it goes. So now let me do one thing is equal to B2. Fix it. Now for second year, this is the balance. EMI is same. Interest is same formula. Repayment is same formula. Balance is same formula. Do for 1 day. Uh, 118, right? So 118 plus 7. Actually, there is slightly normally 114 months.
Okay.
Around 4 months, it will be over 144, not 14, 115 around. But slightly here and there happens because of the approximation. Okay.
Okay. Okay.
So now around 115 months, it will be 0. Okay, it should be exactly 0 actually. But what happens? So we have committed a mistake. What mistake we have committed? Let me correct it. So it will be like, it will be, this is, yeah, this is from first, 0 will be this one. That also it will be okay. 24238. Yeah. Okay. It should be 0 here. Anyway, 6,000. Okay. So this is 115. Okay.
Yeah.
Here it will be 0. So now, so this is the mota moti. Now this is approximately. This is the repayment. This is the interest. Okay.
Right, sir.
And just everything I'm putting in. Sorry. Okay.
Yeah.
So now, yeah, 232. Okay, this is now which one is the interest? This is the interest, right?
Yes.
Now we just get the sum. I got it. Sum B2 to D1. So this much is the interest, total interest amount you are paying. 10,35,000.
Yes, getting it.
Okay. So this is how it is being calculated actually. Every month you'll have to do the calculation.
Okay. Okay.
Got it? You'll be
Yeah,
able
got
to do
it,
it?
sir.
Yeah.
Yes, yes, yes. So
Very simple. There will be
okay.
slightly here and there because of approximation, like, so there is like a few months here and there happens. Okay, you don't have to worry.
So
It
this
is
is
effective.
B7. Okay, B7.
Yeah, or you can do one thing. Okay, just let me share this sheet and immediately you can do one thing. How to do that? Give your untitled document a name before it's been shared. This is that. Okay, so many spreadsheets. Okay, so CPC, no, so 3F. So, this calculations you see, this is
Okay.
whether it's okay or not. Okay,
Yes,
do
sir.
not.
Yes, sir.
You'll have to calculate it yourself. You cannot take their calculation because there is a in their calculation they will reduce this thing. They will deduct that GST. You're getting it? So if they are saying it is 7.75%, 7.85%, so with that you'll have to add 1.18. Multiply it by 1.18. Okay.
Okay.
Because they also so do not take, you calculate it yourself. Okay, let me do it myself. Okay, I'll show you. So now, yeah, so this is the everybody please just make a copy of this particular sheet, everybody, if you want it. Okay, just a moment. Okay, just let me make this correction. Okay, let me see effective interest rate. Okay, then after that you'll do.
But sir, one question. This GST, I think it is not part of the EMI. Like they don't charge the GST in this.
Or anything like it may not be GST but anything. So are you sure they do not charge GST on interest?
No, sir. In the home loan EMI, GST is not there.
Not there. Okay, fine. Okay, it's a home loan, right? Yeah.
Yeah.
Okay, yeah. Okay. Okay, but anyway, let me calculate out effective return. Okay, so there might be file charges. Okay, recently, you see, people like me got cheated. Just now, somebody gave me some offer. I got just something health insurance, right? My health insurance. That's okay. You will be get this much, and then you can give it in 3 or 5, 6 or something installments without any interest rate. Then I said, "Are you sure?" Yeah, I'm sure. You don't have to. I made the payment. Then after that, because they will do the calculations. I trusted them and made the payment, committed. After that, when the bill came, there are file charges. These charges on the file charges, GST. Then there are so many charges. Ultimately they have taken the interest rate. When I did a rough calculations, already they have taken some 5-6%. They have taken out. Okay. So this is what happens, right? This is what happens. This industry is like this. It's very difficult, rate and then.
Sir, this interest rate, like I have not calculated. It is available in the LIC portal itself in my ledger in the LIC home loan. Yeah.
It is always good that we calculate it ourselves effective interest rate.
Okay.
Now this, because I am directly taking it on a monthly basis.
Okay.
And after that, this is a PB, right? No, this is. So 6.9 effective interest rate after all the
Okay.
adjustments and all. Okay. If this
Okay,
is the EMI, this is the effective interest rate per month.
Yeah,
Okay,
so
that
point
means-
0.04 difference comes actually.
हाँ,
Okay.
ठीक है. ये होता है, like don't start fighting. Sometimes like people start fighting with them. Okay. 8.22% per annum. Okay.
Okay.
So this is the effective interest rate. Okay. Now you will find it it's 0. Now you will get it the Excel picture. And it's almost like that. Not be much difference.
Yeah,
You see that?
118. Yes,
you can
yes,
see.
yes, correct.
So now which one was the interest? Around 11 lakhs 17,000.
Okay.
So,
So what will be like it is better to like repay this and
you see, a very simple question. Actually, let me tell you, now you are in the
because
finance,
just
yeah.
5-6 months back I was just doing some, I was checking with my like colleague also. So I was, when the interest rate was lesser, like say that time it was 7% in a home loan. But now because of the RBI this one and inflation, this has came almost to the same level. So concept was like, obviously, whatever I'm getting the interest, obviously I'm paying in the home loan also. So is it suggested to cancel this and then whatever money you are getting, you start investing in other continue with the PF?
Okay, so now you are paying 8% rate somewhere around, right?
Correct, sir.
Okay, so now again, in somewhere else you are getting 8%, right?
In PF.
In PF, you are getting PF,
yeah.
8%, right? So now if you release some of money, so are you 100% sure you'll be able to make better return than that?
If I continue with the PF, obviously, because PF is something like, it's a retirement fund. So that's why my doubt whether I should withdraw that retirement fund and pay this, and again I should continue with higher PF or something like that.
Now, yeah, that is a call you'll have to take. Okay. But otherwise, as you can see here, if you if you can really make if every month 30,000 rupees comes to your hand,
because here again the catch is like your interest percent may go up in the coming years. We don't know, like somewhere at some point of time 10 years back it was 12%, so we don't know what will be the market. So that's why I was not able to take a call whether I should withdraw my PF and pay this, then let me again start PF, or obviously that is my call, but I just want to understand like what will be the ideal scenario. Like
you see how old you are?
I am 39 years, sir.
39. So another 20 years you have till retirement.
Yes,
right?
Yes.
That's a good enough time to create a corpus. That's what I feel.
Yeah.
Okay? So now 30,000 rupees, if it comes to your hand and if you can really invest it with proper knowledge, so I'm pretty sure you'll be able to make much more.
Okay.
Right?
But only risk I will be taking, like my PF will be zero, like my retirement.
PF will be zero. Yes, of course. Your PF will be zero. This will go out. 30,000 will come to your hand. Okay. 30,000 will come to your hand, and then of course, PF will be zero. Whatever is the accumulated. After that, it will start growing again from zero. Okay. So now this 30,000, this 30,000.
But there one question, sir. Like say PF again, it is like calculated in a I say compounding interest. So if I withdraw that, suppose I have some 15 lakhs or say 10 lakhs, whatever it is. Now, if I withdraw that advantage of compounding would obviously I'll be losing, which will be like I'm not doing the detailed calculation, but I'm just asking an ideal
so
scenario.
you are losing compounding and you are giving the compounding to the bank.
Okay. Getting it.
So bank is giving you loan because you are compounding it for them.
Getting it.
So now it's a decision is yours. If you think, okay, this will give me peace of mind because, okay, fine, my kitty is there. Okay. So then, okay, so there is two way. Like, if it gives, okay, 30,000 every month I am giving, okay, I want to have a, so that is giving me headache. Okay, so this is one way. Another is, okay, so my entire kitty. So entire, you'll be able to repay that entire loan.
Yeah, I'll be able to pay because 3 years back it was 20 years. Now it has came down to 10 years because I repaid in between from my bonus and whatever I was getting.
Okay.
So in 3 years I reduced to 10 years almost.
Okay.
So
now
my only thing is like whether I should pay this interest and continue, and because obviously I'm getting, as you said, like I'm getting even in the PF also. So somewhere it is making zero, or what will be, LJ financial, like guidance, what should be the ideal scenario to be suggested?
You see, ideal scenario is you have knowledge, you should get rid of it. Ideal scenario. Pure finance scenario is get rid of it. Okay. And then you start getting the 30,000 rupees and start investing in properly. We'll get much better money.
Okay.
For example, 30,000, like, for example, if you manage to get 12%, so how much it will become after 20 years, right?
Yeah.
So 30,000 is equal to your future value. Future value rate is say 12%. Okay, 12% is 1% per month.
Right.
NPR will be your 20 years, so 20 into 12 to 40. Okay.
Yeah.
40 and minus PMT is this much. 0. Okay. And 1. Okay. It will be your 2 crores 99 lakhs 72,000.
Okay. So this gives a better clarity actually.
Got it?
Yeah.
So this is what happens. Like, and I'm pretty sure you'll be able to get much more, provided, like, you. Two things are there. You see, students, everybody get knowledge here. Some of them that stick to their knowledge. Some of them have doubts, and then they stray around. It's like, again they go back buying this, selling this, buying this, selling this. Okay. So if you do not do that, stick to your knowledge, have the proper knowledge, stick to it, then definitely you'll do good. Okay.
Yeah. But this gives a fair idea like what should be the direction now. So anyway, like thank you very much, sir.
Yeah. Got it? Okay.
Yeah.
Everybody, please this thing, because I am going to delete it. Otherwise, like, I have got like a lot of Excel sheet. Excel sheets means Google sheet.
I've got that link, sir. So I
got the link. Okay, please, everybody, please this thing. You can copy it. Okay, copy this thing.
Yeah. Thank you, sir.
Yeah, you're welcome. Okay, now who is there? Sorry, Krishna. Then yeah, Mr. Rajat. Yes, ma'am. Can you unmute yourself?
Good evening, sir.
Yeah, good evening, ma'am.
I have a question. In value research, we see that there is absolute return. Can you please tell me what is absolute return?
You see, these are all cheating returns. I told you in the master class itself. Okay, absolute return means they do not consider the time value of money. Okay, so what they say, okay, I started with 100 rupees and then it has become 200 rupees. Okay, it has become double. Okay, so 50%. Okay, this is not a scientific return actually. This is not the scientific way of calculating return. Scientific way of calculating return is always compounded. Okay? Because nowhere there is a simple return. It doesn't exist actually. In financial takes, it doesn't exist. So you please do not look at all these things. Only IRR, XIRR. Okay, basically IRR and XIRR. These are the two main returns. Or if somewhere they mention this is the CAGR. IRR is also CAGR, XIRR is also CAGR. Absolute return is not CAGR. You're getting it? So any return which is CAGR, compounded annual growth, actually this is the compounded annual growth rate is the actually meaning of the return. Okay. So that should we follow, others we should not follow. So do not try to understand also, no point.
The tabular column, it will be given that annualized return also. So it will be, we will get a fair idea when we see the annualized return, right?
Yeah,
So,
annualized return, sometimes what they do, you see, like I don't know, because sometimes what they do, like, you know, sometimes when they sell the scheme, what they do, they take that absolute return, then after that, they divide it by total number of years. Absolute return means, suppose 100 rupees has become 200 rupees, so it has become 100% over 5 years. Then they will say, okay, 100% return over 5 years means 20% annualized absolute return. Okay, that is also not scientific. Okay, so that always looks, yeah, it's not scientific. I have not compared it whether it's good, it looks better or it looks smaller than the compared return, but this is not scientific return. Do not see all these returns. There may be so many flat rate, like, you know, so many things they say. You know, and I myself do not understand. I need to ask them, like, you know, hey, tell me how you are calculating. They also don't know how they are calculated. Okay, so because, you know, sometimes, you know, this is a flat rate. Okay, fine. Okay, you tell me, like, you know, what is the how you have calculated it, right? So that's what happens. Do not look at all this. Only look at CAGR. IRR is a CAGR. XIRR is a CAGR. Okay, ma'am? Don't look at other returns.
okay. Sir.
Clear,
And,
ma'am? Yeah.
and can
Please
you
go ahead.
see what is alpha? You have told once, but I am not recollecting it now.
Okay. Alpha is, you have attended the workshop, ma'am?
Yeah.
You have attended the workshop, right? So alpha is, there are two things. One is alpha and one is beta. Okay. So alpha is, in a very simple language, alpha is, suppose if we assume that market is not giving any return at all. Okay. If the market gives zero return, then how much return the fund will give? That is alpha. Suppose market is not giving any return, completely zero return. The alpha is 3, means even then this fund will give you 3% return. That means this fund will always give you 3% more return than its benchmark. Benchmark or market? Benchmark, whatever is the benchmark, right? So for the fund, every fund, they have a benchmark, right? So if it is the equity large cap, all the equity large caps, they have a benchmark, one common benchmark. All the mid cap funds, they have one common benchmark. Okay, everybody follows that benchmark, and they mention it like, this is our benchmark. And in value research online, you can see the benchmark. They have mentioned it. This is the benchmark. Okay, so now the alpha means, if the benchmark doesn't give any return, means this particular fund will always give this much more return than the benchmark, always. Okay, so this is alpha. Beta means, beta, suppose somebody says, okay, my fund beta is suppose 2. 2 means, if the benchmark goes up by 1%, this fund will go up by 2%. Okay, so that means it will give you beta plus alpha. You're getting it? It is like that. Suppose the benchmark goes up by 2%, and my beta is 2%, then my fund will give you 2 into 2, 4% return, plus 3% alpha, additional return. Total 7% return my fund will give you. Okay, so this is how it is calculated. Even if you do not understand it, it's absolutely fine. And if you understand it statistically, if you understand statistics, then this is nothing but the equation of the straight line. It's a straight line regression line equation. Y is equal to mx plus c. That's it. Statistically, if you can understand it, well and good. If you have an idea, if you do not understand it, okay, it's fine. Absolutely fine.
So the alpha in Axis Blue Chip is 0.58. So it is not compared to the other large cap funds. This is less, right?
Yes.
Yeah.
So we'll have to go for highest alpha.
Higher alpha. Yeah.
Higher alpha.
Yeah. And one more thing, the AUM is small, so it is not safe for the, because in Quanta the AUM is small. Yeah.
What happens? Your confidence levels, normally what happens if the AUM is small, what happens when they, suppose I start a fund, okay? I start a fund, and then slowly people will start coming in. Okay. And then when it comes in, when people come in, then it remains like since the people are there, so many investors are there. But if after some times, what happens if the fund does not grow, people do not come in. Okay, so then what we can do, like we may wind up the fund. Sometimes what happens, people are shifted. So like they will give you, they were shifted from this fund to that fund. All these things happen, right? So many fund disappears. So they will shift your fund, or otherwise they'll give an opportunity. You can withdraw it, or we'll shift you from this fund to that fund.
So is there something like that when the AUM is low, and do they wind up that only that particular fund? So what will happen to the investors? Sir?
Yeah, that's what I'm saying. They will give you an opportunity, may give you an opportunity that you can withdraw your money, or we will shift your fund to this fund. Normally they merge it. They say, they do not say we have closed down. They will say we are merging this fund with this fund. But they have so many funds, right?
Yeah.
So they'll say we are merging this fund with this fund.
So the investors' money will not be lost.
Investors' money will not be lost. But the characteristics of your investment changes completely. Suppose they merge it with a mid-cap fund, say, okay, so they will give you notification. Of course, they will have to give you notification. So they will give you notification. Then your entire purpose, suppose for some purposes you are investing in large cap. Okay, suddenly it becomes say you find yourself you have invested in mid-cap. That cannot be good. Okay? So that is the problem. Okay. Otherwise, okay, see, quantum is, but even then, so far quantum is concerned. So that was also a question, but it has been running for I think 9 years or so. So 9 years it has been running. I don't think they will wind up. Okay, that's my gut feeling. It can happen, anything can happen, but still, its possibility is slightly less.
And
900 crores. Yeah.
One
Yes.
more question.
Yeah.
Today we are investing in the 5 rating fund. But after 3-4 years, there are possibilities for that to come down from 5 to 4. So at that time, but still we are continuing with the same fund. So what should we do as an investor, whether to shift or just what should we do, sir?
What do you think? Now I'm asking you, what do you think? What is your suggestion?
My suggestion is I'll just have a watch of that fund. And if the performance is low, then I'll plan to shift to the other better thing.
That's what. Because one star comes down, sometimes you can okay, fine, okay. So normally that things sometimes it happens. I've seen it. Sometimes it happens when there is a change in fund manager. Okay, that can happen, or because of something, it may happen. Okay, it may happen, and in that case, you observe, because there is not much difference between 5-star fund and 4-star fund, but from 5-star, if it goes down to 3-star or something, then it's dangerous.
Okay.
Then you should shift. So you remain observant, and if you think, if you feel like no, I want to play safe, I don't want to take risk, so you can shift it. The call is yours. Okay, but ideally, it's always better. You see, normally how this professional fund management has been done, because otherwise they have standard. Right, everything SOP is there, standard operating procedure. If that's what I am training you guys, right? Go for 5-star, go for alpha, and you can have your eventually. Now today you are getting 5-star plus alpha. Okay, tomorrow when you have knowledge, and there are a lot of students here, those who are joined couple of months back or years back. So now they have become so expert. They look at different criteria. Okay, sometimes we'll say they will come and discuss that. Sometimes they do that, I have found, okay, these criteria are important. Sortino ratio is important. Sharp ratios are important. They have grown to that level. Okay. So now, you can have a look at that, and then you can take a decision. But now I am giving you only 2 steps. So that way, every professional fund manager, they have strict rules. Check this, check this, check this, check this. If they are all okay, if out of 5 parameters, 4 are okay, we'll continue. If the out of 5 parameters only 3 are okay, 2 are not okay, then we'll sit. We also need to follow that. So that you'll have to decide. Okay, we'll see this. Okay, if they are all okay, I'll continue. If they are not okay, then I'll shift. But it should be always the brain, not the heart. Main problem is we put our heart into this thing. So that is dangerous.
And regarding
this happens here, yeah.
And regarding the insurance, I have taken the Mediclaim insurance. So, but when you discussed, you told that it is better to have a health insurance because that covers a mediclaim and.
Okay, now let me tell you. You see, nowadays mediclaim and health, they are used in such a way. They always say mediclaim. Right? And right now, I have taken one insurance. Again, it's actually health insurance. They call it mediclaim. Okay, but actually, categorically, they are two. Like I gave this example in case of LICIP. LICIP it's a secondary market. It's not a primary market because money didn't go to the company. Money went to the government. Okay, so government got the money, not that company. So that way, it is a secondary market. It's not a primary market. Okay, but still, it is called. People are saying it's a primary market. Okay, the people says technically, which is not correct. Similar thing is happening with mediclaim and healthcare. So everybody says it's a mediclaim, but technically it may not be mediclaim. It may be healthcare also. Please find out, because if it is a mediclaim, then it will be like a disease specific. Okay. And if it's an umbrella cover, then it is actually it's a health insurance, but they are saying okay, people say it mediclaim.
So we should find it out whether it covers the health, that is a pre-hospitalization and post-hospitalization also.
Yeah, everything. Like of course, it can be customized, and sometimes what they do, they mix and match also, right? Mix and match means like if this is the total health insurance, like endowment plan, right? This is a total health insurance, and you have a special cover for your say heart attack or heart disease, or special coverage for cancer, or something like that. Okay, they try to mix and match also. Try to find out what it is actually. Most probably it is health insurance.
Okay.
Because when it is a mediclaim, your premium is very small, and they will talk about that disease only. It's a disease specific. Okay. Got it, ma'am?
Yeah. Thank you so much.
Okay, welcome, ma'am. Okay, Jivan Kishore is there. So here we have one health, mediclaim and health insurance expert. Jivan Kishore, can you just come up? I think he'll be able to help you guys. Jivan Kishore, can you just raise your hand? Nildas, I am coming to you. Kiran, Nildas, I am coming to you. Okay. Jivan Kishore, can you just switch on your this thing? Yes. Yes, sir. So now I am taking you in. Yeah, you are into health insurance?
Yes, sir. I'm into health insurance.
Okay, that's great. So you have got an health insurance and mediclaim expert. So I think he'll be able to tell you. You are in Telegram group, Jivan?
Yes, sir. Yes,
okay.
Sir, I'm into Telegram.
Okay. So here is an announcement. Anybody has any question regarding health insurance and mediclaim, put in the Telegram group. Jivan Kishore is there with us, which is an expert in insurances. He'll be able to help you. Would you like to add on this madam's question?
Yeah, generally, mediclaim is not exactly same as health insurance, sir. Mediclaim will be kind of giving the compensation to the charges which were incurred while hospitalization. So generally, it will cover both hospitalization charges, sometimes accidents, and some specific diseases. Whereas health insurance is kind of umbrella where it will cover all kind of related to hospitalization. In this, there are some limitations. So nowadays, most of the people are taking health policies instead of mediclaim.
Yeah, Jivan, we have lost you. Jivan Kishore, we have lost you. Hello. Okay, am I audible? Because sometimes, can you hear me, guys? Okay, so I am audible, right? Yeah, that means Jivan Kishore is, yeah. Okay, Jivan Kishore, I think you have gone offline. Jivan Kishore has gone offline. Because it's very difficult to say, because sometimes I keep on saying, because later I realize that I am offline. Okay. And at my end, there are a lot of fluctuation in net connection happening. So yeah, we're trying to fix out. Okay, anyway. Okay. Yeah, Jayant, sir, you got the this thing, got the link. I shared that link. Got the link, Jayant sir. Jayant Tambi, sir, you got the link? No. Okay, just a moment. Let me see if it is still there. Yeah, it is there. This is the link. I shared that link. Okay. Now, yeah, Mr. Neil Das. Neil Das.
Hello, sir. How are you?
Yeah, I am fine. How is going? The course.
Yeah, I have done the course long back.
Okay. Oh, you are Neil Das, right? Yeah.
I've done the course. I have attended the workshop.
Yeah. Okay. Now I can remember. Yeah. Okay. Where? Why don't you like this thing? Why don't you? Okay. Where is that? Okay. I think you'll have to switch on your this thing.
Sir, even if I switch on the video, you won't be able to see me. Actually, there's a company policy. It's my official laptop.
Okay.
Like I have already enabled that video.
Okay.
But still, I don't think you will be able to see me. That is some concern. I have enabled the video.
Okay. No, we cannot see you. We cannot. In fact, cannot add spotlight. Okay. Fine. At least like you are there. Okay, but because a lot of people face this problem, or through official laptop, they cannot access our course. Because our course talk about share market. Okay, a lot of guys complain. So you are not facing this issue, right?
Another concern is here in my case. The concern is if if it is active now, this webcam, these logs will be captured. This logs will be captured. It will go directly to the IT team.
Okay.
So there is so many concerns actually. Okay. Even I don't have the pen drive access in my laptop.
Okay. Yes, Sai Krishna. Yes, sir. This happens. I can understand because it's a company policy, because companies are somebody is discussing about shares, okay, block it. Somebody discussing on investment or block it. You see, I am educating people on how to save their hard-earned money so that people don't get cheated, right? My ads are blocked every second day by Facebook. So once I gave them left and right actually, and now I have stopped giving advertisement, and I have said it's too costly. So you put money in, and now it is because of recent RBI, all these things, you'll have to pay everybody advance. Because so many things that happen. Those who are in the business, they can understand. You'll have to pay advance. So you pay advance, then they will block your ad. Your money gets stuck up. So I don't know, So this is financial literacy, everybody, you don't understand. Okay. So now, this has become sometimes I feel, is it a big conspiracy that people don't just let people get educated? There are some people don't let others get educated on finance. And all this knowledge, at least that 99 rupees worth of knowledge should be given at the college level. Everywhere, across India. That's how it should be. Yeah, Neil, sorry. I just became emotional.
No, sir, it's okay.
Yeah, tell me.
Sir, actually, that financial plan, that calculator, already I have done it, and I think we had discussed last time regarding you may remember regarding I discussed regarding NPS, and Sunil also comment on same.
Yes.
So it's done. But I have few more concern on this because as we discussed last time, like I have some stringent plan like child education and marriage that we may place our fund to some restricted one. I mean, which are most conservative fund that we can put our money. But say after that I have enough funds to invest, and now I am planning to grow that money in that particular fund. So now, as you can see, now I think we are in Nifty P of 21.02 as on today. So if probably we can invest in a large cap till now.
This is extra money after achieving financial freedom. This is extra money you are talking about.
No, sir. Just no, sir. I didn't consider the retirement plan. Retirement plan.
Okay.
I would like to take some risks because it's a long term, no.
Okay. Okay.
Okay.
How long is there for you? How long is there till retirement?
Around 20 to 21. It's not much long, but
but still, like 21, 22 is fine. Okay. 12% guaranteed return मिलेगा ही मिलेगा. Okay, वो तो guarantee है. Anyway, yeah.
Okay. So now we can now we should invest in large cap. Am I right, sir? At this point.
Yeah.
Okay. So now we have selected some good large cap. Already I have selected. Okay. And I have started investing in the lump sum format as well as SIP format. So after some time, it may suppose I am considering the P ratio will go up and it will reach around 26 level. Then as you as you guided us to then shift it to the debt fund. Now the first question, and there will be some follow-up question as well. The first question is. As I told you, this fund is strictly for growing the money. It's not like I have some specific plan. I would like to grow the money. So in that case, which fund I need to choose? I mean, it should be short term. Short duration, mid duration, or long duration. There.
Okay, so at that point of time, you say short duration funds are risk free, right? Completely. Okay, not completely. Short duration funds are relatively they are less risky. Okay. Long duration funds are risky. At that point of time, we'll have to see. Now, very interestingly, so I was looking for a long duration fund because I needed a better return. So I was looking for a long duration fund. I needed some 8% or something return. But I found, I cannot remember right now, I found one short duration fund that is giving me 8% return. Okay. So now short duration fund is less risky. We know that long duration funds are more risky because volatility is more. Okay.
Yes.
So now, since I have got one fund, and that is also like quite I think 4-star or 5-star, cannot remember exactly. Like here itself, like I was just discussing, and then so if I am getting the required rate of return by investing in a less risky fund, we must go for that. So I just selected so go with that. Let us go with this only because it is giving decent return. Equivalent return like a long-term fund, long duration fund, but it's a short duration fund. So what can be better? Like, it's a beautiful thing. Short duration fund normally it gives lesser return, but I am getting a short duration fund which is giving very good return, and with all the 5 stars and everything, all the ratios are pretty good. So we want to have it. So now at that point of time, we'll have to take a decision. Okay, it is there. Like it's like okay, fine. Like we need to take risk, but while even if you have a parachute, while you are taking a jump, you are making a jump, you should know whether this is the right time to jump on. Okay? And whether it's a parachute or it's a school bag. Okay, all these things we must understand. Okay, so now, yeah, we need to grow, we need to take risks, but it is not that, and I will take a school bag and a jump. You must jump with a parachute. So that's why. So now what happens? Because since it's a very high, it's going to bounce. Like the percentage of going down, like when it's a upper quartile means there is a 75% chance that the market will be down. Only 25% chance that market will go up. So when you are in such a situation, you must protect your fund. If you do not do that, then yeah, there will be consequences. For this sketching this 25%, okay, possibility, that is also possibility, not guarantee, possibility. Okay. So for this 25%, sometimes you lose.
So, sir, you mean, but sir, we are moving to this debt fund to mitigate this risks only, right, sir?
Exactly.
For market crash.
Yeah.
But once again, you are further customizing by selecting the short duration fund, which are giving more or less similar return.
Yeah. So that at that point of time, we'll have to look at it. When you have to shift, then we'll look at that. Which fund will be the best for our purpose? Okay.
Okay. So, sir, now the next follow-up question is here.
Now, let me tell you one more thing before. These are your follow-up question. Okay. So now, suppose from here, market goes up, okay, and you made a lot of return, okay. Then after that, you may find that the corpus, like, because when the market will go up, your fund will go up, you'll make money, right?
Yes, yes.
So there's a probability, right? You may find, like, now you have made so much of money. Now, even if you put that money in the debt fund with some 5-6% or 7% or 8%, whatever, right? 8% return, you will be able to achieve your goal. Okay. So in that case, you may find, okay, so now I don't want to take risk. I am definitely, like, it's a guarantee that I'm going to make money. I'm going to reach my goal. So you remain aramse. But if you think, no, I want to play more, then I can let it come down. If it comes down again, you go to equity. Okay. So this is how we do. What we do, we are playing actually beta. Whenever beta is high, like, we shift to safe place. Whenever it becomes conducive, we come out and we play. It's like that. Very simple. Got it?
Yes, sir. Definitely, we will go to the debt fund. But because if we don't go, then obviously that it will, if it go down, then the whole profit will turn into
negative
loss only, right?
Yes, exactly.
That's why we are.
And this is what happens with 98% people. You see around, ask them. This is what happens in most of the time. Those people who do not have knowledge. That's what happens actually.
Yes. So can I ask the next follow-up question?
Please.
Yeah. So, sir, now say at that time when there is a time come up that yes, we need to switch to the debt fund, and my fund size become much higher. I mean, I'm talking about around more than 80 lakhs, 1 crore once year. Say, I don't know when the Nifty P will touch that point, 25, 26 level. That anyway, just let's say that my total fund size now is around 1 year or more than 1 year, for example. In that case, sir, if I have moved to debt fund, well and good. But now after that, I mean, when I can expect that to reinvest in the large cap, as you mentioned, in 20.47 20.5 range is a very good level when we need to transact. Actually, we need to then again move, we need to sell that debt fund part, and then we need to enter into the large cap fund as we discussed earlier. But sir, now the question is the tax part, sir. Now there's a big taxation will come up because the 30% tax, if it happens within 3 years, then as we are in 30% bracket, then I think there will be a huge tax if I sell all the debt fund amount.
Okay. Now in the debt fund, how much you see, you don't have to calculate from, like, in equity how much you have made. You don't have to calculate it. When you invest, how much return will be making?
As I am
8%.
7 to 8%. Yeah.
7 to 8%. Suppose within that, okay, on 8% you will have to give 30%. So how much it will be? 2% on capital. That too, if you make money. Okay.
I mean, in when I am in debt fund part, right?
7% on 30% on 7%. So how much it will be on capital? How much it will be? 2.4%.
3%. Yeah.
So 70% still will remain with you. Only on this is the main thing. I see. The thing is that what I have found. Okay, I didn't know that. Okay, after doing this course, I have started. I got it. So people think 30%. Oh, but 30% on my 1 crore. No. Only that 7% return you make, the profit, out of that profit, 30% you have to give. Got it? And that's also, if you have to stay for more than 3 years, that becomes very negligible.
That's okay. Tax industrial benefit will get. But
exactly.
If it is suppose Nifty P again fall at 20.5 range within 3 years, then of course we have to sell all the debt fund schemes and enter into large cap. In that case, as you mentioned, that capital gain part only, I need to consider the 30%, right? Which will be considered in my income tax. I mean, in my regular income, right?
Exactly. So only profit part. So don't worry, your capital will, whatever, suppose you make 1 crore, so your 1 crore will remain. On 1 crore, whatever profit you make, on that you'll have to give 7%. So 30%. Okay. So don't worry, it will be much less. So people have that psychology. Okay, 30% on 1 crore. Okay, how much? Because that's what I see in the master class also. A lot of chat comes. Okay, now you consider 30% tax. How much? As if we are giving 30% tax on our capital. I don't know. Only profit.
Okay, so sir, at the end, actually, so we will gain finally when we will enter into large cap, then we will actually gain 4% around. Actually, we will gain effective gain.
Yeah, definitely, right? So when you come down, then after that, when it starts going up, 4% to like market to एक दिन में जाता है कभी कभार.
Okay, sir. Thank you.
So no. We are planning why we are investing in 21 because we know from 21 again it will go to 27 or 28 or whatever, 26 or whatever, or 20 to 26 or something, right? So now that's a huge.
Okay, sir. Thank you very much for the understanding. Thanks, sir.
No, that's how like these big institutions they make money, right? Others are scared because yeah. Okay.
Thank you, sir. Thanks.
Okay, welcome. Okay, Kiran. Yeah, can you switch on your video? Possible?
The internet connection is not so well, and also I'm not well.
Your voice is not very clear.
Yeah, some issue with the internet. So, are you able to hear me?
Okay, I can hear you. Yeah, no issue. No issue, sir.
I also typed my question in case if you're not able to hear me.
Okay, where it is?
Yeah. So,
okay, questions on loan repayment. Is it good to increase the EMI and pay it quickly? Is it better to do a part principal payment every year? Is both same? You see, this is Kiran. Okay, it depends on you, right? So now like how do I look at it? Because the first thing is that you should not borrow money and then invest. Okay, that's the first thing. If you have already done it, right? Now you'll have to take a decision. Decision is like we did this calculation. Okay, so if I repay this, okay, now you are getting some monthly every month. Okay, every month you are getting some money, and then you can do that calculation. I am getting every month this much. Okay, so if I am getting 6%, but if I invest in somewhere else, here I am paying 6%. Here, if I invest in somewhere else, I'll be getting this many percentage. Okay, so now at this point of once you make a house loan, then actually really speaking financial terms, if you do that calculations, you actually got caught up until and unless like you have some money. Like this time we did this calculation with Santosh or somebody, I cannot remember. Okay, my memory is not that good, right? And I forget names very quickly, right? So we have done this calculation because he has got some money already. Okay, so now he has found out. Okay, immediately, like if he repays his loan, and he can make a lot of money. Okay. So now that is a different story. So now, despite having his money, he took loan. That's why we said, do not take loan. Use your own money to buy asset. First thing, if you have already bought it, you have already taken the loan. Now you see. Now, if you think this much amount you are getting every month, you have a choice to repay the loan. Okay. Where you are paying, where you are getting the money at 6% or 7% or 8% in fact. And here, if you know that you are 100% sure you can make 12%. Okay? So once you make the loan, so it is better not to repay, put that money in the market and get 12% return. If you are very sure, 100% sure, that you will be able to get much better return. Okay? If you have money somewhere else, idle money, then you can repay it and you can get rid of the headache. You're getting it? So this is how it is. Now, are you sure you'll be able to make much more return than the interest rate you are paying to the bank? I'm asking you,
so because so I think the current interest rate with the bank is 10.5%.
Okay, if it is 10.5%, so if you are sure that this is too high, okay, normally what happens, let me tell you how this industry is, how this finance professionals they pay. When the interest rate goes up, what they do, they repay. When the interest rate comes down, they borrow. Very simple. It's like market only, like equity market only. When the interest rate is high, if you have some money, repay, because it is very challenging to get that much of return. Okay, so when the interest rate is very low, then you borrow, because when you borrow, what happens? You are paying suppose 5%, but you know, instead of putting this in the like giving it at instead of repaying it, if you invest somewhere else, you are going to get much more. So that calculations you'll have to do. Now, when the interest rate goes up, it is better to get rid of it. Okay? But if you're sure that you are going to get significantly higher amount by investing somewhere else, then let it remain. Very simple decision. Understood,
Okay.
Kiran?
Yeah.
Or it's like you need more clarification?
Yeah, more clarity. So for example, right now, I want to pay it quickly. I mean, I want to, so right now, for example, I have 10 lakhs of loan and every month I'm paying 10,000 rupees for 15 years. So now, is it better to pay 20,000 per month, or is it better to pay 10,000 per month and 1 lakh every year?
Okay, now my question is, are you sure whatever money that you are having, will you be able to make, how much return will you be able to make? What is your confidence level?
Yeah, I just joined the course like last week. So based on what I've heard, like 12% is what we can make in a long term. But right now, in the short term, I don't know I can make 12% return.
Okay, okay. So now, of course, like you have, so this decision you'll have to take. It's very simple.
Okay.
This decision you'll have to take. If you think that you will be able to make much more money, then let the EMI go. Don't repay it. It's not worth repaying. Okay. People, when you, if you do not have confidence that you'll be able to make this much of money, okay, then you repay. Very simple.
Okay.
Very simple.
Okay.
Okay.
Clear?
Got it?
Yeah. Thank
Okay.
you.
Okay.
Yeah, clear.
So let's see, like you have done your this thing. Have you done your you can unmute this. Have you done your workshop?
Yeah, it only started last week, so I have done like 2 sessions of module.
No, this 8 hours workshop, 4 hours plus 4 hours. This is the long workshop, 4 hours plus 4 hours. Long workshop.
Oh, this is the first one. This is the first.
This is the first one. Okay, okay. So just wait till the workshop, right? So in the workshop, you'll have much more clarity. Okay. Till then, try to finish as much video as you can, like finish, complete it. Okay. So after workshop, then you'll have a fresh thinking. Okay.
Okay. Thank you.
Okay, you're welcome. Okay, guys, already 10, right? No question coming. Okay, so now please get up. Okay, okay, one more question. Mahendra Arake, yes, sir. So this is the last question, no?
Yes, but I have 2-3 questions.
Okay, fine. This is the last question. Is last person.
Sir, I want to know the significance of turnover in basic details given on site for each mutual fund.
You see, turnover means turnover means, you know what turnover means? Do you know that?
No, sir.
Okay, so turnover means, you see, you don't have to look at all these things that much. Okay, a lot of informations are given. Okay, because sometimes what happens, like all this, those people who sell them, like so you said this is the turnover. Okay, this is the expense ratio is so high. Expense ratio, all the performance is measured after paying expense ratio. Right, so expense ratio is when you are looking at a performance, it is already irrelevant. Okay, if you do not know what is the performance, then okay, expense ratio is very high. Don't go for it. Like all this stuff nonsense happens. Okay, so here turnover is basically what I am saying. Okay, it's not that important factor. Turnover is basically how frequently this fund manager they change their portfolios. That's the turnover. Okay. So there is like how frequently they keep on buying and selling. That's that turnover. Okay, it's like it depends on the basically turnover. Like some fund managers are very active, so they are comfortable with a very high turnover. Some fund managers are passive, so they really invest for longer period of time. So it depends on the style of the fund manager. Okay, so we don't have to break that much of head on this thing. It's a fund manager specific issue. So they will take care of all this stuff.
Sir, one thing, some mutual funds are showing very huge alpha. Like
Very huge alpha.
Alpha,
Okay.
because in PGM India, mid cap it is showing 12%, 12.1. And some Parag Parek 7.93. So going like that, alpha is very high. So if we are investing, it will give us return without any much risk compared to the other funds.
Okay, that is how it is theoretically. Okay. So
Yes.
now, is it a 5-star fund?
Yes, sir.
Is it 5-star? Then you can consider. But 12 alpha is like, oh my God. So who is it?
Yes, sir. That's why I thought, because it is showing 42% return for last 1 year. So it might be that aberration or deviation due to that COVID market volatility in last 2 years.
It might happen. You're awesome. Okay, it's an awesome observation. This might happen. This may be, but 12% alpha is, oh my God, like, he is a god. This might be like, Warren Buffett or somebody. Okay.
It
Next
might
one.
be that 42% return for last 1 year.
It's a 5-star fund. Then yeah, you can see alpha. Then
but it is mid-cap fund, so
mid-cap fund. Okay, Sharpe ratio. Have you seen the Sharpe ratio? So in terms of Sharpe ratio, how it is compared to others, Sharpe and Sortino? Did you see that?
No, sir, not that much. Because
I
don't
know when you have doubt. Yeah, when you have doubt, then you must go deeper. Okay, so you can compare the Sharpe ratios if they are better. If alpha is that much, like it might be better. Okay, it's like oh my God, who is the fund manager? What is his name?
Anirudh Naha. Okay, he is from 2018, and Utpal, he is from 2022. So he is just new one.
Okay, so 2 fund managers are there.
All are new.
Anirudh, like can you see like where he was earlier? Is like it's written out there where he was earlier. Is it there?
Yes, sir.
Young
no, from 2020.
Okay, fine. Anyway, so I'll have to look at it. It's a very. What is the name you said? Like I'll have to look at it. Okay, very interesting. 12 alpha. Oh my God! I think for the first time I have heard it. Yeah, sometimes individual portfolio management it happens. Okay, but in that case, you see normally the stability of the fund is not that much. So you say, what is the name of the fund? You said, Mahendra?
Just a minute. PGIM India Mid Cap Opportunity Direct Growth. May I share my Excel sheet so that I have shortlisted 7-8 mutual funds on that alpha?
Yeah, please go ahead.
Like in this, what I did on value research, I went for 5-year rating, 5-year returns, and whichever are giving highest returns and 5-star rating, I went for that, and just cross check for other on this star ratings on Economic Times and Money Control. So like
I think in the Economic Times they follow value research only. So just see, I think they follow value research.
Their ratings are even same. Just for one fund, it is different. And and again, what I did for 1, 3, 5, 7 years, and I thought that last 3 years might be aberration. So what I did, that I divided it for first 2 years. That means the 7-year return is giving 16.55. Then first 2-year CAGR is nearly 5.95%. I divided that for next 5 years.
Okay.
Compounding so that. Like that, twice I checked which funds are giving in initial 2 years good returns.
You have done a very detailed. So what is your background?
MBA Finance.
MBA Finance. Okay. I should have got you like while I was in industry. I should have hired you, guy. Okay.
What I did that previously I planned what I want to do, and accordingly I needed to first for retirement planning, and when I am doing for retirement, then I have to repay my housing also.
Okay.
So that wise for retirement planning I consider 12%. But for that also that whichever are giving good 12% return and 15% return, as two categories I expected. 15% for housing loan repayment and 12% for retirement.
Okay,
planning.
so you have separately you have done this planning for repayment.
Yes.
Okay, housing loan. Beautiful. You're awesome.
And another for this.
Where are you working, Mahendra? Can I ask you where are you working now?
In Bank of Baroda.
Bank of Baroda, which department?
But I'm branch manager.
You are a branch manager. I think you should shift to treasury.
I will, but I think for that I need 8 years.
Yes.
For retirement, I need 8 years so that I can repay and I will be completely free from that. Likewise, so I shortlisted for high risk that 15% house flexi cap. If what mutual fund managers are giving me near about good returns, then I can be passively invest in it. And for 12%, what I thought that Canara Robeco, as you said, that I will be investing it in SIP through that, so that I can check myself and get some confidence that time to time it is going correctly. So for two goals, I took 3 funds per goal, so that if one fund goes bankrupt completely, then also I will be getting near about less return, but 10-12% return, like this 15% return I won't get, then I will be getting 11-12% after 8 years.
Okay. Now you see one thing is there. Like I have seen your portfolio is okay. My two observation. First observation is, you see you are taking. I don't think like you need to take so many funds. First thing is that okay, 3 funds or 4 funds, almost like have you checked the portfolios? Portfolios means this their this thing portfolio means investments.
Sir, now and again in this Parag Flexi Cap, I saw that they are doing 3 funds. In 3 stocks, they are investing in.
So what I mean to say, what I think. So you are investing in 3 similar kind of funds. That means first of all, that means there are a lot of overlappings, which is called portfolio overlapping. Okay, there is possibility that you are investing in like similar companies through various routes.
Yes, sir. One of the question was also that should we consider equity funds like this Parag Parek, which is investing in international companies like Amazon, and one was Alphabet, and one was 3 funds were there.
Now, okay, now let me tell you, this is one concern. Okay, I'm coming to that. My second concern is, okay, it is okay if they're investing in foreign companies, that is okay. Why? Provided they are provided they are like they falls under our criteria. The criteria is, first thing is that why flexi cap? That is one thing. One question comes to my mind. Why flexi cap? Because flexi cap means they can change and you do not know whether they will follow our criteria of shifting from different caps to like mid cap to large cap to mid cap to small cap. They may not follow that. Okay, they have their own criteria. Okay, so this is one concern. Second concern is you are investing only also in mid cap. Okay, so now in case if it goes up, if the market goes up, it's well and good. Okay, in case market comes down, you're like this will give you they will give you very huge negative return. Okay, because now market is almost risk level is 50-50. So I have these two concerns. Two concerns means first thing is that why you are investing in mid cap. Okay. Second thing is that why so many funds. You can really narrow it down.
No, what I did, I firstly decided how much percentage I need for my goals.
That is fine. That's fine.
Like that wise, I considered 12% and 15% two categories I needed for two my goals. In 15% category, I checked which funds can give me 15% if I don't pay attention also for that 7-8 years.
Okay, so now you see, now this is the problem. This is the problem is what? Now you have seen 15%. How did you come to know that they will be giving 15%?
I checked their last 7-year return and
that is so that is the issue. Issue is you check their last historical performance. Okay. So now what do you think? So suppose now the thing is if it comes down, right? Suppose if it goes up, that is fine. But if it comes down, what will happen to your return? If the market comes down, if the PE comes down.
Okay? Yes, sir. That is why what I did that I checked 1 year, 3 year, 5 year, 7 year and divided it again 7-year returns by 5-year returns. So that for that 2 years, how much it was giving returns. 3-year return, 5-year return was divided by 3-year returns. So for 4th and 5th year, how much it was giving returns. I was able to check. Likewise, as I was then also I am getting returns more than 11% for or near about 10% for 3-4 funds.
Okay.
So that means nearly it is giving for each year near about 10% at lower level.
Okay. Okay, but how old is your data? Means what is your data range? Last?
Now it is for 7-year only.
Okay, 7-year only, right? You yourself has said only, right? You see, last 10 years has been an exceptional year for the equity market across the world, including India. Okay. So now, so that risk is there. Always remember that. Okay. So you just keep this in mind. Okay. So these are the, but if you are 100% sure, nobody can be 100% sure, right? In fact, nobody. Right? And if you are very sure, if you are closely sure that you are going to get this much of return, given the market condition, given the market P, then you can go ahead.
Yes, sir. Their alpha is also more near about 4%, 6%, 7%.
Yeah,
so,
this is.
As I said, it might be due to this COVID market volatility also.
Yeah.
But,
so that's why it is actually the whatever you have selected, that is not very much going as per our set SOP.
Yes, sir. So what I did, till I get a confidence, till I get a confidence, I will be investing in SIPs for those funds only, which are I am comfortable with and which is as per our SOPs. I will do one-time investment doing annually. So if fund is going or not good, so that I can each year consider it accordingly.
Exactly. It's best if you follow our SOP. Okay, it's always best because that is the safest way. Then of course anybody can take risk because we take risk. You may get a huge. For example, you are taking suppose if the market goes straightly to 26p or something, you use all these mid cap funds, so they will give you huge return. And after that, probably you don't have to. You can directly shift to debt fund or something because once you get huge return. After that, you can directly shift to debt fund and you can remain happy Singh Maniwala for the rest of your life. Okay, so that also may happen, but it's a subject to risk. Okay, so now its call is yours.
Yes, even if I fail, I would have to extend my service only. So there is not that much risk. This planning is for retirement, and that is also in 8 years.
How old you are?
I'm 35.
Oh, you have time with me. Okay, fine.
In banking, as I said in earlier sessions also, there is lot of pressure, and they are now pressuring us to sell anything.
You can be also. You can. I think it looks like you can also be a trainer like me.
I will be but till date I was not getting any good idea. So firstly, we should secure our financial. Then we can take any kind of challenges or risks.
True. Beautiful. Awesome. Awesome. Okay,
So,
I wish you all the best. Like, you have done really meticulous research. So, yeah.
I went through your all support sessions also from December, January.
Oh,
At
is
that
it? Oh,
time, during traveling, because to my home is 3-4 hours away each
okay.
weekend, going and coming. That means I was getting 2 times chance for 3 hours continuous session
True.
listen.
So,
At that
you are
time,
you
you
are in
used to say
Mumbai?
1.5%. Now you are saying 2% out of this 100% people.
So, you are in Mumbai?
No, in Nanded,
Okay,
Maharashtra.
Nanded. Okay. Okay. So, anything else?
Yes, that was the hmm, that is my call then. International fund for that Bharat.
International fund, like,
Not
yeah.
international fund. It is investing in 2-3 international companies.
That is fine because they are taking risk, right? So
Yes.
that's why, like, we invest in mutual fund. They are taking risk, but we should not invest ourselves in international companies without knowledge. So now
Yes.
you are taking, like, that onus is on him, and if he is following our SOP, following our criteria, okay. So then after that he is doing that, okay. So he has got good alpha, he has got good ratios, right? Good sharp ratios, good certainty ratio, everything is good, and he is investing somewhere. Okay, that's okay. That's absolutely fine. Okay, because he is taking risk as a fund manager. It's like, you have delegated that duty to that fund manager.
Yes, sir. Passively, I'm lying on him for getting me through that for 8 years.
Okay, beautiful. Now you have achieved your financial freedoms balanced completely.
Yes, sir. Because already I am getting NPS through bank, so
Okay.
I consider that also how much fund I will get after 8 years.
Okay.
I considered even my gratuity PL encashment, so that how much income I will be getting at that point of time.
Okay.
So it is currently 34. That is sufficient. And
Okay.
considering 12% is also okay, I think.
Yeah, this is okay. Like, you have 30 years, long years. I think it'll be okay. And in between, like, it's in between, if you play, then like, it will be much more. Let me tell you. Because of 30 years, 12% guaranteed you are going to get. Even if, like, market goes here and there, because 30 years is a long year, you are going to get that much. Okay?
I am considering for only 8 years, and I am considering my retirement age, post-retirement expected lifespan 40 years. Then also it is giving okay.
I think you should pay me much more.
Yes, sir. But now 8 years is also, I am feeling like it's too much in bank. I was firstly planning for 5 years.
So you are real happy seeing money. Like, you have written something. So have you written testimonials in Google?
No, sir. I haven't started investing. That's why I just wanted to show you before starting this, working this plan.
Okay. This looks good. As I have told you, these are the concerns. Otherwise, yeah, big advantage is the age is with you. That is a big advantage. And yeah, it looks good. Like, this long term, like, these large cap funds, like, I am very much confident. Okay, mid cap fund, I am, as I have told you, I am not very confident, because this is not the time to enter into mid cap fund, actually, really speaking.
What
So, yeah.
our SOP was that we will be investing currently now in large caps, and when P will be less, then again we will be going in mid caps. The same thing might be doing those managers for those mutual funds also, flexi caps and
flexi caps
mid-cap.
only will do, but you do not know what is their SOP.
Yes, sir.
That is
But
the
whatever might be their SOP, they are giving returns for last 7 years, nearly 10% and plus. So
if you believe in them, then it's okay, right? So, but the thing is that what what we think, what I believe personally. So this, which kind of cap, whether it's a large cap or mid cap or small cap, normally I keep that decision to myself. The rest of the decisions regarding the choosing companies, selecting companies, selecting stocks, I delegate this decision to the fund managers. So that's why I'm very specific. Okay, I'll take decision. Okay, whether I should go for mid cap or small cap. After that, okay, you take decision which stock to buy within this. Getting it? But otherwise, it looks okay. If you are confident, 12% is 12% is doable. Actually, it's not very distinct. 12% is very much doable. So now, let's see.
For lump sum, I'm giving to fund managers, and for SIPs, I'm keeping with me.
Okay.
So that once I get confidence, I will be playing with it.
Okay.
So SIP is doing with me, so that stage by stage, I will be getting more and more confidence. I will be doing likewise with our SOP.
Okay, beautiful, beautiful, awesome. But I know I loved your calculations, the way you have done it. Okay, so it's very difficult to get people, like, we had to really struggle to get good analysts when I was working, right? And you have got a knack of it. I have got few guys, so now they are working with some other companies, so I cannot get them. So awesome. Okay, I loved it. You really you have made me so happy. So please write your this thing. Huh?
Yes, sir. Yes, sir. Testimony.
Write testimonials that what you have achieved. And people think it is okay. It's a dream. Okay, becoming financially free, doing planning is a dream or something. People think it that way.
Again, I divided it in 2-3 funds, so that if something happens to that fund, if fund manager dies or something happens, he leaves, anything might happen. So in that case also, I have divided such that future value will be same across those 2-3 funds.
Okay, that's awesome. Okay, that's awesome. Beautiful. Okay. Okay. Nice. So nice. Yeah.
Thank you, sir.
Anything else?
No, sir.
I think you can go ahead. We can go ahead. Right?
Yes.
Be careful with this other flexi cap and this mid caps things. You be careful. Rest of this I'm giving green signal. All this which your large cap you're getting it. Quant fund, have you taken quant fund? Look at quant fund.
No, sir.
Today
no, sir.
Awesome fund. It's a small fund, but I found it very awesome. In fact, that was discovered by some of the students only. Okay.
I went first for highest returns for 5 years and 5-star ratings. Likewise, okay, I checked with all returns.
Alphas, basically you took alpha. Alpha is that it's very important.
I took 2-3 points, and whichever rating is more, like this alpha, then 5-year rating, 7-year rating, and 7-year rating divided by 5-year rating. Beautiful. So that also, and whichever are going more rates.
Okay. The quant fund is not coming to your screen. It is not appearing in your screen.
Okay. I haven't taken it. Last time also in many sessions you said what they are doing exactly we don't know. So.
But there, all the parameters looks very good. As I have said last time, okay, you were there, right? When we were discussing. So that's that's my concern. But I saw later, I saw all the parameters. In all parameters, they are doing so good. In fact, at least quantitatively, financially, number-wise, there is no way you can reject that. Only thing is that okay, they are small corpus, but for us it's it's more some 700 crores or something. So that's quite enough. Somebody who is trading in 10 crores, 12 crores, then it may become a problem. I don't know, for somebody who is into lakhs, I think that's quite a good enough, quite enough corpus.
We can switch in next 1-2 year also if we think some other fund is good or quant is good compared to whichever we have taken.
Yes, why not? You can do that. Definitely, you can do that.
Thank you very much, sir.
You're welcome. So your Guru Dakshina will be, you are going to write a beautiful testimonials in Google. Okay. Okay.
Yes, sir. I will be attending this session also this Saturday, Sunday.
Yeah,
And
please do.
yes.
In Saturday, Sunday, I'll share that Google link. Right now, it is not with me. I'll have to really look for where it is. Okay. So then you write a beautiful, I don't know, it is possible to achieve financial freedom through planning is possible. Okay. People need to believe this. People don't believe that this can happen. That's the main problem. Mr. Muti Kwan Fan, what is the name of the Kwan Fan? Okay. I cannot remember. Okay. Just a moment if it is there. This is quant focused DIR, direct. Quant focused direct. Quant focused direct. This is the one. Quant focused direct. Okay, guys. So thank you so much. Saturday, Sunday, going to be big. Don't miss it. You may not get it next time. It may not happen on Saturday, Sunday. Okay. So because there are a lot of challenges, particularly Sunday, both Saturday and Sunday is a very big challenge for me. So for the first time, I am doing it. So please do not miss it. Okay. Please do not miss it. Next time, there is a possibility that we will have to attend it on Thursday and Friday. Okay. We have been doing like it is 2 years. 2 years we have been doing it on Thursday, Friday only. Only for the first time we are going to do it on Saturday, Sunday. Online charts utility answers. Yeah, online charts utility. Yeah, everything. The core of it. Okay, you see, insurance I am not going to cover on Saturday, Sunday. Insurance we are not going to cover because that's something you can read and you can understand it. Okay, there is nothing much because you do not. Insurance is something like all this premium, etc. There is very less to do research. Okay, mainly okay they have that. They do the research and they do the premium. Okay, this is the premium. You take it or you don't take it. Okay, so that's it. But the main thing is that whatever we have discussed today, investment, that is in our hand. Okay, so the investment part we will go to the details. Okay, from the very preliminary, whatever we need to know, everything we'll discuss. Okay, we'll go into the depth. Is it how to choose that right mutual fund? We have already today we have done a lot of things, such things. Okay, again, we'll go very systematic way. And I'll show everything. Okay. Yes, sir. We have to pay. No. Jivan Kishore. You see, Jivan Kishore. There are so when you join, I don't know because there are a lot of changes happen. Earlier, those who joined couple of 15 days or 1 month back, at that point of time, there are two types. One is with workshop, another was without workshop. So with workshop, people pay 2,000 more. Without workshop, there is there is slightly less, 2,000 rupees difference. Okay, so that was the price. Okay, later we have found out that this is not helping people. Of course, earlier we are making more money because a lot of people come. Okay, 2,000 less, a lot of people come. Okay, but that was not serving the purpose. People were not very much satisfied, so we made it compulsory. So then that criteria gone. But when you join, at that point of time, if there was like two kind of pricing, one is without, another is with. Okay, so then you need to make sure whether you have got the workshop or not. The best thing is that you can just, if you are not very sure whether you have taken workshop or not, then you just ask Poonam. You can send a message to admin and she will check and she will let you know. And let me tell you very simple. Okay, I'll show you. I'll show you very simple thing. So what you need to do. Okay, I'll show you what you need to do. So you'll come to know that whether you have got access or not. Utpalkc.com, you go there and you log into your course. And after login to your course, there's a workshop button. Okay, just a moment. Student. You just click this access 3 app online workshop. If you can open it, that means you are in, you don't have to pay. You have already paid. Okay. If you cannot open it, that means you, while taking admission, you didn't take. You just need to open it, click it. So if you can open this page, you don't have to pay. If you cannot open, that means you have not taken this thing, taken workshop, and then you can make a request to Poonam. If you think like you should attend the workshop, so you'll have to pay. Okay, got it? Clear? You just click this. If you can open it, you don't have to pay. That's it. It's automatically. Got it? Yeah. Can you open it? Jivan Kishore, can you open it? Could you open it? CF online workshop. Could you open it? Just check if you can open it or not. If you can open it, then I know you don't have to pay. Very simple. That means you have taken admission already. While taking admission, yes, it doesn't have permission. Okay. Okay, so those who can open it, that means you have already got the permission. You have already taken the workshop. Okay. If you cannot open it, that means you have not taken admission. You have not taken workshop. Why? So earlier we have the two categories. You took the cheaper one where there is no workshop. And still, again, let me tell you, so it's a special because nowadays workshop has become compulsory for everybody. Okay. I think you can ask Poonam. The price is 4,000 rupees, but still we are keeping that same original price because now we really try our best to help people. So paying that same that mastermind price, 2,000 rupees, you can join the workshop. Okay, you can just ask Poonam and you just ask us, please give discount. So we'll give discount, don't worry. If you want to join. And my strong suggestion is, please do workshop. Please do workshop. There are a lot of difference happens. Okay, okay guys. One focus fund is not in large cap. It is in no, it was in large cap category, or is it large to mid cap? This I am not very sure. One focus I found in large cap category. No, just a moment. One focus fund. Oh no, it is one focus direct. This is coming along with the axis and all. It's all a large cap category, now. One focus fund direct fund. It's a large cap category. Equity large cap direct plan. Can you see that? Neil does equity large cap direct plan. Here it is coming, no? One focused equity large cap. They have so many funds. This is quant focused DIR, equity large cap. I think what is the exact name? Exact name. Quant focused fund. Yeah, quant focused fund. Direct plan. They have so many. Quant focused. Quant has so many. Other funds in large cap. No, but this is like this is quant focused fund direct plan, equity large cap. Direct plan. They have other funds also. They have so many funds. But this is coming under, okay, let me see, edit it. Yeah, quant focus direct. No? This is coming under this thing, no? Under this. Because otherwise it will not appear here. It's appearing in this. That means it is a large cap. No. Do not go by. Do not go by the. No. Do not go by the name. Neil Das. Do not commit that mistake. Do not go by name. Okay. Name can be anything. Focused fund, like normally they are thematic funds. Thematic funds are being given normally, but there is no binding, like from SEBI that you cannot use focus fund, right? So focus fund means okay, I can be a focus fund, mid cap focus fund, I can be a large cap focus fund. Do not go by the name. So if they are appearing here, that means they are their benchmark. classification happens depending on a benchmark. You can give any name. Okay, I can give one Sukanya something something. Okay, but ultimately you will have to tell that MP, this fund manager will have to tell me what is the benchmark. So based on the benchmark, you are given category. Okay, our benchmark is Nifty, or our benchmark is this. Okay, based on the benchmark. Always remember it. So not the name. Name is not important. Benchmark is important. Yeah, focused means focused is like, there is no focused category. Focused is not a category. Okay, focused is not a category. Category is equity large cap. Yes, 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 Lalita ma'am. Category is equity large cap. Focus, like, focus can be anything. Focus is not a category. Okay, okay, guys, already 10:37, right? I'm getting tired. See you on Saturday, Sunday. And my strong request is, do not miss this workshop. Please, everybody attend the workshop. Okay. Thank you. Bye bye. See you on Thursday, because it will be like an awesome. All those new guys you have seen, people, what they have achieved, right? I was not telling lies in the master class. Now I think you get confidence. Okay. And let me tell you, everybody will come to that standard. Today you have seen the, like, old people were, like, the kind of standard they have achieved. Everybody is going to achieve that standard. Don't worry. Be serious. Okay. You will achieve financial freedom. Right? Believe me. I was not lying in the master class. Okay. It's possible. Yeah. Okay. Okay. Thank you so much. Thank you so much. Thank you so much. Bye bye. See you on Saturday. Thank you.